Banks are collapsing, banks are being bought so they don't collapse. You're hearing this all over the news, but what you're likely not hearing about is what you need to do about it right now. Jump in with me, let's talk about Banking Collapse 2023.
Investing Secrets with Kevin Attride.
Banks are collapsing, and there is fear and there's contagion. These banks have collapsed or are at risk of collapsing or were recently bought so that they wouldn't collapse. And you're probably wondering, what's it going to do to me or my business? What's coming up? But before we jump into that, I want you to give me a big thumbs up, subscribe to this channel so that you don't miss out on any of our pro tips and what to do in our current economic challenge. So first, before we jump into the solution, let us first talk about the problem. Why is the banking industry at such risk these days? You're hearing it all over the news. First, let's talk about the banking system. Banks practice fractional reserve lending or banking, and it's when they take in $1 of deposit and lend out 10. So when someone comes back and says, I want my money, they actually have to make sure they're taking in more money to give back money. So it is an underlining risk of the commercial banking system. And when everyone is depositing and when everyone is paying their debt off, it works. When there's an issue of people wanting their money back faster than the banks expect, then there's a big problem. Second problem is that the Federal Reserve has given cheap money, propping up the economy at very low interest rates for years, and it's caused a destability in that banks had access to this cheap money and took on riskier assets during a time when they could get access to cheap money when the fundamentals of the economy were changing. Third is you have some banks that just are weaker performers. Their finances don't look as good. They haven't made good management decisions, and therefore they're at greater risk. In addition, we're now seeing a new era of banking where you don't line up at your bank and withdraw cash or get a check. We're seeing a new time of which people pull up their smartphone and literally pull money out of the bank, put it into another bank, shifting things around, and just a few presses of a button, money shifts in and out of banks. And we see that very much like the stock market. When there is concern, when there is worry, money can move very quickly. And so when you see stock market crashes or many crashes, we can see similar things at the banks. In addition, there are a few banks that have had extremely poor management or poor management controls and potentially even unethical behavior. There's allegation that at SVB, money was being pulled out hours before the government was to step in to help, or hours before accounts were frozen. And so all of this leads me to say there is a problem in our commercial banking system, and we're going to see more collapses, more banks. And do you think that the federal government is positioned best to take over? You're likely paying way too much of your hard-earned dollars to the government. Reduce your largest expense in life by utilizing every tax-saving strategy with the experts at Smead CPA. Did you know that the FDIC, the insurance for the banks, did you know that in 2008 it ran out of money? And so the FDIC can step in when your bank collapses, but not if dozens or hundreds of banks are all about to collapse at the same time. Think on that, and I want you to contemplate the solution. What are you going to do for this solution? First and foremost, the commercial banking system is at risk. I want you to have that mindset. Because of the fractional reserve banking and all the other details I outlined, your money could be at risk. And I'm not suggesting that you run off to the big banks that are far more stable because they're too big to fail. The government would have to step in. But what I am saying is that you want to be careful and you don't want to just put all of your money in the commercial banking system. You want to practice an alternative strategy. So first, I want you to consider how you have multiple bank accounts. And if you have businesses, I encourage you to have businesses, especially if you have real estate. It's an LLC. You're treating it as a business, that you want to have bank accounts in different banks. Probably even more than two, to make sure that if there are challenges, you can ensure that your money is in the best bank. And you can look to the Weiss rating agency that has a far better rating and safety profile than the traditional Moody's, etc., that said banks were fine in 2008 when they were not. So I want you to consider how you have multiple bank accounts. Maybe you have one with a big bank and have one with a regional player, someone you can have a relationship with, but you want to ensure that you're using data to ensure that your bank is as solvent and secure as possible. In addition, my suggestion is that you only keep enough money in your commercial bank accounts that you need for your daily, weekly, or monthly cash flow. I'm suggesting that you not have hundreds of thousands of dollars, whether it be your emergency fund, your reserves, or you parked money because of an upcoming investment. My suggestion is you do not have large sums of money in your commercial bank accounts. You want to ensure that you're keeping up with their policies, that you're keeping a good relationship with them, but you want to minimize the cash, not so that you're always daily having to move money, but that you're keeping a minimum amount for your cash flow. So when you have a limited amount of cash in your bank, what are you going to use? How are you going to have access to all of your additional money? Your emergency fund. I've talked about having a minimum of 3 months, preferably 6 months of your core expenses. And so where do you park that emergency fund? Where do you have your money for your reserves? When you have real estate, you need reserves in case there's a larger capital expense. Where are you keeping your investment dollars when you want to purchase a new piece of real estate or a new asset or a business, whatever it is? Where are you keeping that money? Here are 2 suggestions of where you should park your funds. First is physical gold, because physical gold has proven itself over millennia to hold its value over inflation. And I've told you the current inflation rate is not in that 5, 6, 7, 8 that they're telling you by CPI, the Consumer Price Index, but it's actually closer to that 12 to 16% when you use the calculations of the 1980s. They changed the calculations and minimize what inflation looks like, but you're seeing inflation still very high. And so physical gold allows you to retain that value over long periods of time for generational wealth. When the dollar isn't buying what it used to, I recommend McIlvaney ICA for your gold and silver IRA or private collection to hold value for decades. So, how do you actually use cash outside of the commercial banking system in a safer system? I want you to consider the insurance industry for your banking. And that may sound strange, but the elites, the wealthy, are using the life insurance industry as their banking in the infinite banking concept. And there are other videos that you can watch on this on my channel, but I want you to consider using infinite banking, the chassis of the life insurance industry, of which is very secure because every state highly regulates these life insurance companies to ensure that they have solid reserves. Stop letting the commercial banks take advantage of you. Use infinite banking to compound your savings at a much higher rate by connecting with the experts at Living Wealth. So the commercial banking system is at great risk. Spread out your money, ensure that you're minimizing the cash that you have in the commercial banking system, leverage physical gold so that you're maximizing your value and the store of your wealth over generations to beat inflation, and leverage life insurance for your banking, the infinite banking concept, to make sure that your money isn't at great risk. And if you need help with any of these strategies, or you want support as you dive deeper, as you're ensuring that you're maximizing your wealth creation and ensuring your money isn't at risk, I want you to head over to kevinattride.com, where I have a whole host of resources and products to allow you to maximize your wealth creation, because I want you to experience financial freedom.
The information contained in this episode are opinions not to be used as individual guidance. As always, consult your own financial team for your investment decisions.